Hello and welcome to Tikona Capital's weekly market review for the 6th of February 2025. Let's take a quick look at how markets performed, key macro developments, and what to watch in the coming week. Indian markets ended a volatile week on a positive note after an initial sell-off following the union budget. Higher STT on derivatives triggered sharp declines during the Sunday session, but sentiment improved steadily through the week. Support came from the government's continued focus on infrastructure capex, fiscal discipline, and optimism around the India-US trade agreement. The Sensex rose about 1.6% and the Nifty gained 1.5% for the week. While profit booking was visible toward the end, the broader tone remained constructive. India's domestic macro indicators remained supportive in January. Manufacturing PMI improved to 55.4, services PMI rose to 58.5, and the composite PMI climbed to 58.4. These readings indicate broad-based expansion across the private sector, highlighting resilience in both manufacturing and services despite global uncertainty. Global economic signals were mixed. Eurozone inflation eased to 1.7%, falling below the ECB's target and pointing toward a pause in rate cuts. Germany's retail sales showed mild improvement, while China's manufacturing PMI edged back into expansion. In the US, private payroll growth slowed, suggesting some cooling in labor market momentum. The Union Budget 2026 reinforced the government's commitment to fiscal discipline while sustaining growth. The fiscal deficit is targeted at 4.3% of GDP, with debt projected at 55.6%. Capital expenditure was raised to 12.2 lakh rupees crore, underscoring continued infrastructure focus. Markets reacted to higher STT on derivatives, which raised trading costs, but relief measures such as lower TCS rates and targeted incentives for manufacturing and data centers provided balance. NDIA and the US announced a landmark trade agreement, easing tariff-related tensions. US tariffs on Indian goods will be reduced to 18%, and the additional penalty linked to Russian oil purchases has been removed. Both countries are targeting $500 billion in trade by 2030, with export-oriented sectors expected to benefit. At Tikona Capital, we partner with clients across equities, mutual funds, unlisted investments, and advisory solutions, driven by research, built with conviction. Cyclical and infrastructure-linked stocks led gains this week. Aarti Industries, Upper Industries, and Balkrishna Industries outperformed, supported by post-budget recovery and improving economic signals. On the downside, profit booking weighed on select stocks. Bharat Dynamics declined amid weakness in defense names, while Intellect Design Arena and Hindustan Copper fell due to sector-specific pressure and broader market caution. Our app offers a seamless way to track all your investments in one place, with paperless onboarding and real-time insights. Unlisted market activity remained firm. Insolar Energy partnered with Versogen to develop AEM electrolyzer solutions, with plans to build 250 to 300 megawatts of capacity, scalable to 1 gigawatt by 2027. Investor interest also remained strong in IPL franchises, with valuations estimated between $1 and $2 billion, alongside steady demand for names like NSE and Hero. Looking ahead, markets will track a heavy macro data calendar. In India, key releases include money supply, CPI and WPI inflation, and foreign exchange reserves. Globally, focus will be on China's inflation and property data, along with US retail sales, jobs data, and CPI inflation. These releases may drive near-term volatility, though policy stability remains supportive. Before we close, we'd like your view. What do you think will drive markets in the coming week? Here's your guide on a journey through the world of investing. Just as Krishna guided Arjuna on the battlefield, this message leads you through the ups and downs of the markets with clarity, courage, and discipline. Your investing journey now has a Sarthi, showing the way forward. Investments in securities market are subject to market risks. Read all the related documents carefully before investing. Our philosophy is rooted in discipline, clarity, and long-term wealth creation. Thank you for joining us, and we look forward to staying connected.